Hey guys, I'm Kalila Reynolds, and it's time for another episode of Money Mondays JA, brought to you in partnership with Proven Wealth. Well, Proven Wealth's parent company, Proven Investments Limited, is doing an additional public offer. It's called an APO, another highly anticipated one. They're seeking to raise a whole heap of money, anywhere from 50 million US if the offer is fully subscribed, to as much as 75 million US dollars if it is upsized. That means if the offer is oversubscribed and people choose to accept more money than what they were initially seeking. And this is one of the bigger offers on the market in recent times. Almost comparable, well, it is comparable to what Trans Jamaica was initially seeking in the 10 billion Jamaican dollar range if the offer is upsized. So the share price, $38.64 Jamaican. They're offering 268 million shares for sale. It opens March 11, scheduled to close March 31. But like I always tell you guys, don't look at the closing date in these things. Treat the opening date as the closing date, because that happens sometimes. Well, we're joined now by CEO of Proven Management, Chris Williams. Welcome to Money Mondays, Chris.
Hi.
Thanks for supporting this product from the minute it started. About a year ago it's been now.
I think what you need to say is that thank you for giving you the idea for this product.
Whatever. Give me no idea.
I remember distinctly, but absolutely. I think the reality is that, you have a certain charisma that people gravitate to. And the online market is showing that. So congratulations.
Thank you very much. So let's start very basic. For people who are just getting into this investing thing, starting to see, what's hot, what's going on, how does Proven make money?
Right. That's an excellent question. Proven Investments Limited is an investment holding company. That's distinct from an investment management company. Mm-hmm. A management company is like NCB Capital Markets, Proven Wealth, JMMB, Mayberry, etc. Those are investment management companies. So we own an investment management company, but Proven Investments Limited, the parent, our business is to buy and hold certain companies. Mm-hmm. So we buy into and hold a number of companies.
So you look at companies that seem like they're poised for growth, that you think will grow over a certain amount of time, and you hold it until...
And we buy into it.
You buy
We buy into it. We either buy it outright or we buy percentages.
Right.
So for example, we are the largest individual shareholder in the JMMB group,
right, at
20.01%. We are minority shareholders in Access Financial at 24.72%. We are the majority shareholders of Brazil Bank, which is an offshore bank based in St. Lucia, and we own 75% of that bank. We own Proven Wealth, obviously, 100%. That is our investment management company. We own Proven REIT, which is our real estate company. And we own a company called IFP, which is based in Cayman, has branches in Bermuda and the BVI, and we own that 100% as well.
And you have a stake in Dream Entertainment.
And we have a stake in Dream Entertainment. That's the best investment.
Really? Why? Why is that the best one?
No, I mean, at the end of the day, we identified a space that is partly tourism, partly event management, partly attraction. And what we've found is that space hasn't been formalized. It still has been held in its informal state. And so we felt that, as is around the world, where with Live Nation and so on, you have companies that have formalized this space, this event space. And we felt Dream had the capacity to do that. And
especially with Jamaica being the entertainment capital of the Caribbean.
And the Caribbean being seen as, sun, sand, and party. I mean, that's just the reality. Playground. It's America's playground. So we want to formalize that playground. And we've been involved with now for a year. And they have two solid brands. They have Exodus Carnival, which is the largest band in Jamaica, and Jamaica's carnival is the fastest growing carnival in the world. And then they also have Dream Weekend.
Yeah. I hear talk that there's plans for an IPO for Dream Entertainment.
Yeah, that obviously is the end game. We want to build the business and then, and take it public, and because there are a number of shareholders. So you want to give shareholders an opportunity to partially exit or exit if they so chose. There's no rush on that.
So you don't think that's likely this year?
Definitely not. Definitely not.
Okay.
Definitely not. We're still building the business, formalizing it, structuring it, and developing it.
But speaking of exit, so when Proven invests in a company, is it with an exit in mind? So you intend to help grow this company to a particular point, and then at that point you get
Absolutely.
reap your benefits, reap your gains.
As a private equity firm, as an investment holding firm, you make money through the operation of the business, and then you make money through the sale of the business. That's called capital gain.
Right.
Right? So exit is a part of our strategy. And you saw that with Access, where we partially exited Access and realized a strong capital gain.
Right.
So and you saw that with Northwood Express. We participated in Northwood Express, that grew, and then we exited Northwood Express, made another capital gain. So exit is a part of our strategy. That's a private equity playbook. In terms of the financial services businesses, those exits are going to be over several years, because we recognize the financial services space as being a solid going concern. In terms of the real sectors, which such as Dream and so on, we're still learning as we go along. But certainly, yes, exit is a part of the strategy.
Of the investments that you listed, where do you make the bulk of your money?
Between JMMB, which is doing phenomenally well. We're very, very happy with that investment. A solid brand, well run, has a great place in the Caribbean, being in Trinidad, Jamaica, and DR, and a team in the Duncans that is obviously committed to the business. Is not not a job for them. This is love.
Yeah.
So
and that's in their logo and all.
And that's in their logo.
Yeah.
So it's a passionate business. So we're very happy to be a participant in that business. So GMMB and Basel, which we executed on about 3 years ago. At the time, correspondent banking was a big fear, and the prior owners wanted to exit and remove that risk. And we took that risk on, and we've settled down the correspondent banking relationships. We've widened it, so they've given the bank a number of options. And
do they cater mostly to St. Lucians, or is it an international bank?
It's an international bank. So as in the case of a number of these small islands, they have a brand that is attractive to international clientele, not just to the locals.
Right.
It's not populated by the domestic clients. It's populated by international clients that want a haven in the Caribbean. So that's what we've seen. And as you know, St. Lucia has a very strong offshore corporate services space, and has
which
a number
has taken advantage
which
of.
we have taken advantage of, because we're a St. Lucian company. So we cater to a number of those companies. Basel also has a branch in Panama and a branch in Uruguay. So we also cater to the South American market as well. So between JMMB and Basel, we are kind of battling for the top spot in terms of to our P&L. And then all the entities are giving us an ROE in excess of 15%. Access.
That's return on equity.
Return on equity, Proven Wealth, IFP, etc. What has also been developing over the last 3 or 4 years is our real estate portfolio. As many would know through the media, we have gone into
your middle class development.
My middle class development, my latte development. So I've learned, and clearly they're not middle class, but we are still searching for the right land and the right architect to give us a solution that can hit that sweet spot of that middle class, true middle class. But we like the real estate space. It's been very profitable for us in the last 3 years. We are landlords. We have 2 or 3 commercial properties, and we also have 6 residential developments, and right across the island in Mandeville, Ocho Rios, and in Kingston. So it's an exciting time in the real estate space, and we also just signed last week for our first development in Cayman.
Oh.
Yeah, so we're doing townhouses in Cayman.
How many?
I think it's 16 townhomes, and I won't say which market segment that's going out. So,
yeah, stay away from that.
I'm staying away from that. But that market is very, very strong. Cayman has been doing very well with their financial services and their tourism. And so we are hoping that the market will remain strong and we can profit from that.
Lots of expats.
Lots of expats, and lots of workers, because the total population is a combination of Caymanians and expats, and of the expats, professional is about 30%, while just the workers in terms of the hotels and the restaurants and so on, a significant portion. So they have a big housing demand.
So looking at the offer now, the APO, you're looking to raise between 50 and 75 million, 75 if you upsize.
Right.
2 years ago, people would have said you're crazy.
I know. People still think I'm crazy. What are you talking about?
Well, because now it's been done.
Yeah.
Now it's been done. You have Trans, you have JMMB's APO as well. A year ago, this amount would have never been raised on the capital, or it hadn't been done yet.
True.
Up to that point.
True.
So what do you want all this money for?
Well, we think there are opportunities for return on equity accretion. We think that the markets, both the financial services market as well as the real estate market, are demonstrating to us that cash is king, and are showing us that there are opportunities to get strong high teens return on equity. And that's obviously what our shareholders want. So we don't raise cash to sit on. We raise cash when we have identified opportunities. And we have identified opportunities in the real estate space across the Caribbean. And we have identified opportunities in the financial services space across the Caribbean. And both those opportunities are showing us good return on equity. So we're coming to the shareholders to say we've found some additional deals.
So the real estate opportunities, those are the ones that we already know about, the Mandeville, the ones that you mentioned
as well as we have
in addition to
we have new ones that have been presented to us.
In addition to Cayman as well?
In addition to Cayman as well, that's correct.
So, and you're looking here in Jamaica or?
No, Central and Southern Caribbean. Central and Southern Caribbean. Nothing more in Cayman, but Central and Southern Caribbean.
And that's as far as you're willing to stay now?
Absolutely.
Can you give it which countries?
Can't say which country. It's a whole heap of competition out there. I have to hide when I leave in the island.
Hide your passport
Yeah, but I have to
stamp.
hide my passport stamp. People after me. So, no, I mean, obviously we want to, identify these deals, and we don't want, to be in a battle to execute these deals that drives up the price.
Right.
So we try and keep them as close to our chest as possible.
Right.
And then, execute and then deliver the return on equity to our shareholders.
Right. So, well, I know that the answer for the financial institution question is going to be the same. You can't really tell us too
Well,
much
it's not
about
Southern Caribbean, it's more Central Caribbean.
Or Central Caribbean.
Yeah.
Okay, and you're looking at a complete takeover or a partial?
Complete. And we do have more than one.
More than one?
Yeah, we do have more than one. So it's an exciting time. There are significant opportunities being presented to us. As we have grown to now 700 million. I mean, 10 years ago we started this business, we had a balance sheet of 20 million US dollars. Now today we have 700 million US dollars and off balance sheet of $3 billion. So, in 10 years we've just done phenomenally well. And so that has attracted deals that we can do at our size, because obviously size matters,
Right.
So the fact that we can do these deals means that, people call us, and that's what we love, So we hope the market responds to our offer, because we're going to put the money to work. We're not going to, we're not going to sit on it. We're going to add deals, and we have demonstrated over the 10 years that we do deals. We did Knoxville Express. We did Guardian Asset Management. We did First Global Financial Services. We did JMMB. We did Basel in St. Lucia. We did IFP.
So imagine the next 10 years. The next 10 years are going to look
absolutely.
like.
I mean, but honestly, Khalil, what we want investors to recognize is that you're participating in a business. This is not a stock price to me or to the other co-founders of Proven. This is our life. We don't look to trade our shares from Monday to Friday. We're watching the development of a business model that we designed 10 years ago that would say we're going to put our money together as Caribbean people, and we're going to look for investment opportunities that can accrete to our benefit. That's the business model we designed 10 years ago. That's the business model we're asking you to partner with us again for the next 10 years, and not buy a stock for what you think the price can jump to next week or not. I'm saying we have demonstrated to you 10 years ago that we can move from 20 million US to 700 million US in our size. Stay with us. We're not done yet. We're not done yet. Participate as a co-owner. Don't participate in just buying shares. Participate as a co-owner with myself, Peter Bunting, Mark Golden, Gary Sinclair, all of us that started this business.
When JMMB did their APO last year, you were affected. Proven was affected as a major shareholder because you were diluted.
We weren't diluted.
Well, because you had to buy additional shares.
We had the potential to be diluted.
You would have been diluted.
That's
right?
correct.
Right. So my question then is, how does your APO, Proven's APO, affect existing shareholders?
Well, we want you to continue to, as we did with JMMB, to step up, because we felt JMMB, continued to be a good opportunity, and they demonstrated to us that they had a pipeline of opportunities that would make their balance sheet and their P&L stronger. So we stepped up and we maintained our position. We want our shareholders to look at us as well in the same way and say, have these guys done well for me over the last 10 years? Have I gotten consistent dividends? Have I seen the increase in the earnings per share? And have I seen the growth of the business? And then if the answer to those questions are yes, as we think the answer is, then do I believe they'll continue to do it for the next 10 years and partner with us, continue to partner with us.
So the message is you want the existing shareholders to step up.
We want new and existing.
We
want new and existing, but certainly we want our existing shareholders to be our ambassadors, to be out there saying, listen, these guys have delivered for me over the last 10 years. And when you take a look at our track record, our dividend yield has averaged between 4 and as high as 8%, and that's tax-free on US dollars, and that's just the dividend yield. And then in addition to that, we moved from a share price when we first started at 10 cents, and then we traded as high as 40 cents, sometime last year. So, you would have seen a 400% uptick in your investment over the period. Yeah.
You mentioned two things that people on Twitter wanted me to ask you about. One of them is dividends. What's your dividend policy?
The dividend policy is give the shareholders the earnings and then let them make the decision on whether they reinvest it back with us, as opposed to holding on to the earnings and forcing the shareholders to reinvest it.
So you don't have a set amount that you say 50% that will be distributed in dividends?
That policy demonstrates that we're going to be as aggressive as cash flow dictates in our dividend. Now, that may mean 50%, that may mean 75%. And that's been the range
So it may
between
vary.
50 and 75. It definitely varies because a lot of our income sometimes is not cash.
Right.
So you can't pay a dividend without the cash.
So these decisions are going to be made at shareholder meetings?
No, they're made at board meetings, and then at the AGM, you can question the board.
Okay.
So they're made quarterly at board meetings, and then annually at the AGM, you can question the board and say whether or not you think the board has done a good job. Our philosophy is let the shareholders feel the benefit of the income that we have generated.
The next question was about the price, the share price. So you're coming to market 38.64 Jamaican dollars.
Right.
You traded on Friday at 38.80.
Right.
How did you come up with the price?
Well, we wanted to give a discount, and the price at the time that we were going through the process of the pricing was in the region of between $45 and $49. And we felt that, 15 to 20% discount would satisfy the market, and that's where we priced it. What we have also seen is that as we have announced the offer, obviously the price has fallen to be in line with where the offer is, which is typical.
Right.
But that's how we priced it, as well as to look at our multiple and to say where our core earnings are, not including any exit capital gains, just looking at our core earnings. And we came in at a multiple between 13 and 14 times, which is below market average, which again gives shareholders an opportunity to benefit from upticks in the market.
Here's another question from Twitter. It says, what lines of business does Proven anticipate will drive growth for them over the next 5 years? What do they see as the main risks? Right.
The areas that we're looking towards that we feel we have not done well in, right? We've spoken a lot about what we've done well in, but
right.
What gets me upset is how we've done on the real sector. We haven't gone into hospitality in the way that I would like to see. We have no hotel brands, in our portfolio. We have no partnerships with any hotels. Our ability to get involved in either a manufacturing company or a natural company, whether it be energy or mineral, we haven't been able to execute on. So those are areas that we're looking at very, very strongly, and we would like to pull the trigger on. You obviously know the areas that we've knocked out of the park. We've done financial services very, very well. We're now doing real estate very well. But those are the areas that keep me up at night. I want to see us execute. The ROEs on those entities, more in the 2022 region, and that's where we want our shareholders to benefit. So we're looking at the real sector opportunities.
Yeah. Here's another one. Any further equity dilution in the next 2 years?
I don't anticipate that, no. I don't anticipate that.
And I asked about the dividend distribution policy already. It said, I think you answered this question just now. We see them doing a lot in the financial space. What moves are being made to diversify beyond that to other, maybe even cutting-edge companies in order to reduce investor exposure to finance?
Absolutely. As I said, that's what keeps me up at night. I mean, I agree 100%. And we're looking at a number of proposals right now. Hopefully, we'll be able to get my investment management committee to approve one or two of those.
Yeah, people were also asking about the underwriting arrangement with Sagicor. What's the benefit of doing that?
The benefit of...
First of all, explain what it is. How does that work?
What it basically is an insurance policy that says if the offer is undersubscribed, Sagicor takes up the difference. So if the market only submits for 30 million of the 50 million, then Sagicor will have to buy 20 million worth of the shares. That's what it is. The benefit of it is security. It allows us to go out there and negotiate, because we didn't know when exactly FSC was going to approve the prospectus. We couldn't hold off on negotiating some of these deals before we closed the APO.
Gotcha.
So we had to be balancing. So we said, all right, let's get an underwriting which guarantees that we must get 50 million and then allows us to confidently negotiate with our counterparties
So
for
either
the
way,
deals.
if you raise the money or not,
Well, if
these deals are going
the
through.
issue is successful or not, because if the issue is not successful and it is undersubscribed, then Sagicor will take up the balance and we'll still get 50 million and allow us to execute on the acquisitions that we're currently negotiating.
All right, but this way, it costs you more, doesn't it?
It costs us more. It
Yeah.
costs us more.
Okay. Anything else that you wanted to mention, Chris?
You know, just as I said before, you know, I'd like, you know, individuals to understand that we're building a business. We're not asking individuals to look at this opportunity as an opportunity to get a quick bounce out of the market. We know that that's been a hot topic, but let's look past stock price and share price and look at the fundamentals of the business and say, do I want to be a co-owner with these guys on a business? We've demonstrated that we've identified a business model. We put our money into it 10 years ago. We built it into something substantial 10 years later. And now we're saying to you, join us. Come with us for the next 10 years.
Thank you very much.
Thank you.
Thanks for joining me. Well, that's it for this episode of Money Mondays JA, brought to you in partnership with Proven Wealth. I'm Kalila Reynolds. See you later, and watch Taking Stock this evening. The analysts will give their take on Proven's APO as well as other pressing matters.